Okay, so as we talked before, we in choosing our portfolio, uh, it's very important to know one point I want to share with you before we go further is the importance of portfolio selection. And this is how we trade, and this is how we approach the market. There are 4 components for a successful trade. And these are, I'm not giving you these numbers out of the air. In order to trade, to become a successful trader, you have to think in a specific way. You have to think in what we call probability by picking up the high probability direction. And in order to pick probabilities or high probability transactions, you need to take and measure what is good and what makes you money, and measure what is not working for you and it's costing you money. Because if you're not making money with it, you're losing money or you're using your time. So I used, and this is part of the stuff that we do in the mentoring when we're teaching in the mentoring room, is that we have our spreadsheets. And while I was doing this, while I was trading, before training traders, when I was in Schonfield, I used to measure my trades, and I had a spreadsheet, and I had every trade has a rule, and this rule has number 1, this is rule number 2, this is rule number 3, and I also found out my mistakes, and I also would add I made this mistake and this mistake, but I was specific in the mistakes that I used to do, and I found out by measuring, and I usually give them this, I showed them this while we're in the courses that we teach, that 70%, and this is counted over 10 years in a spreadsheet. Unfortunately, I don't have the time to share it with you now. But 70%, 70% of all the money that I lost was because I did not follow up on my planning. I did not choose. I do my planning, I choose what I'm going to buy and failing to follow up on my planning and failing on choosing what I should buy or sell, like what we did this last hour and a half, that, number 2, costs me 70% of the losing trades. If you do a portfolio selection, the odds are going to be 70% higher in your favor to make money. 70. It's not 50-50, it's not 70%. And that's why we pay a tremendous importance on doing the planning session and doing it every week, and we take our signals from the planning session, like what we're going to do right now. I'm going to show you, and I have also a nice surprise I'm going to share with you today. The second thing, the first one, is that we have to have the rules, because if you don't have the rules, you would not have to do your portfolio. You wouldn't be knowing how to do your portfolio selection, to pick your entry, to do your plan, where you're going to buy, where you're going to put your stop, and all that kind of stuff. So you do your rules, the portfolio selection, these are the 2 major components. Then you need to get into the trade at the right time, and then of course if you have to take profits, you need to exit the trade at the right time. So the 2 most important is the rules, and these, as I said, we have 21 rules we apply, and then the key is applying that in the portfolio selection so that we do the planning session to get the and if you're able to follow on your plan, remember, failing to follow on the plan costs you 7%. So now the key, if you follow on your plan and you follow on your trade selection, then you have now 70% taken away, 70% of the reason that causes you to lose money. And what we have done, as again, this is going to be for the new year, for all of you guys that are coming and it's going to the new year, what we have done is, in addition to the software now, and we're changing how we do the planning session, but basically as part of the software, once you enter your long points, your structure longs and your structure points, we will share the rules in a minute, But this, again, we're going to try to make it simple for everybody. This, what I'm going to show you now, is priceless. We have taken our survey of all our clients during the last and found out that the biggest problem they have is we give them the entries, again, when to get into the trade, what's the structure point, what's to get there, and once they get in, they don't know when to get out. They have to wait till next Sunday to the planning session, or they have to wait to the next Sunday. So it was, we were giving them, and I kid you not, I mean, this is, I'm showing you, this is live stuff right now. It's not part of the plan, but I'm showing you this right now. This is my personal email. And we did a stat, one of my traders did a stat on the, where is it? 13,000. What is the email that you sent it to me? Andrew, what's the email that you sent it to me now? Andrew is one of my traders. He sent me this number today. We're doing a back testing. And I want you, it's important, I want you to see that. This is today. This, I got this today. Look at this. For the last 13,000. Somebody, just one second. Thank you, thank you. I just got it. No, I just want them to see this, that this is what is live. Let me show it. Yeah, there it is. This is, we're taking it, that's our, from the trade planning session over the last 12 months, from November 2012. 13,796 pips. If you took this at $1 a pip, and here is the spreadsheets, every single one of them in a spreadsheet, and you can get a copy. So what we have decided to do for all of you, or all of everybody that gets in with getting into the planning, is that we are going to, as part of the trade planning session, they are going to get the signals like this. You're going to get a signal like this. So the moment it takes place, the instant we are triggered, the signal is triggered for us, you're going to get the signal. This is it. Buy at the pound CAD, buy whatever. Every single trade, getting into the trade and getting out. The moment it's triggered, the moment we see it, the software is going to issue those signals, and you're going to get it either in your email or in your so again, numbers don't lie. We tested it from this planning session from last year. You would have taken 13,700 pips from the portfolio selection. Add $10 a pip. This means you would have made on a $5,000 account $140,000. I can show you where to get in. We can have the software send you where to get out. We can have all that done. But you guys must pull the trigger. You are the ones that have to shoulder the responsibility of selling and buying. We will give you all that stuff so that you can take the trade. And that is, again, that's what we're doing now as part of the new software. You're going to get this, or we're going to send you the signals. So now we're going to start doing the planning session. And we are going to go back to the plan, and the first thing we're going to look at, as I said, based upon our selection, we're looking at the pound pairs. So we're going to start with the pound yen, then we're going to look at the pound CAD and the pound Aussie, and so starting with the pound yen, we're going to start with the pound yen, And looking at the chart for the pound yen, this is the weekly chart. As you can see, this is a technically magnificent chart. As you can see, we have a trend change, a structure point from here. That is your trend change. This is the moment of the trend, the structure point. It trades on, we use it on multi-charts, but we give you multi-charts as part of the thing for free, bulls. So you get it for free, don't worry. And then you can use with think and swim, whatever you want to trade with it. And there is a lot of surprises Ken is going to take. And the point of the bulls, I want to show you the long-term software. Once you take the trade from here, look at this. This is the buy signal. This is the. If I turn the long-term strategy without any formatting, just turning it on, this is where you need to buy, right there. And you would have been long. Look at this. There is your buy. That is the buy for the dollar yen. You bought it from 128.82. Look at this. This is ridiculous. 128.82. This is on a weekly, of course. It is now 172 and it's still open. You have 2,060 pips. I'm sorry, 20,000 pips. From 125 to 175, you got 20. I don't know what the hell it is. Can you take a trade like that? And if you do it on the daily, again, it's the same. It doesn't matter. We don't change anything because these are the rules. The same entry right here at the structure point, 159, because this was the first trade. We've been short, long. This is the long-term system. Look at all this. These are filter trades. Look at this. And now it's still open. So with that, now we're looking at the. Before I go forward, I just want to show you guys that this has nothing to do with formatting. I can do this on anything. That is price behavior, because you're dealing with the behavior. Look at the dollar yen. That is your results in the dollar yen. You're up 200 and from here, from 99 to 104. If I change to the euro yen, the same story. You're long. 325 pips. It doesn't matter the instrument. If you apply the rules that we are going to share with you when you train you, and we're going to give you in the training, you're going to get the software. If you take one of those two trades and you're settled, especially on the one with the yen pairs that we discussed, that's all what you need. And now getting the signals in a timely fashion to get you in. You'll be driving your car to get the signals to get into the trade. That is where the money is going to be made. We're going to get you in and we're going to get you out. So, going back to the pound yen, this is now, if we're looking at this, right now, if you're looking at this chart, as it stands now at 172.10, that per se is a buy signal. So just to be on the safe side, we're going to take a buy above 172.50. So we're going to buy it above the high, which is in this case, as you look at the intraday. So as you can see right here on the intraday chart, this here is a structure failure to the right there. That's a buy. As you can see right there, that's a buy. That's the structure point. So just to be on the safe side, we are going to buy it above 172. This is going to be our buy point. We're going to buy it above the 172.50, and we're going to put the stop right here below 172. So we're going to give it some room because it's Sunday. So we're going to buy it above 172.50. So let me put these numbers in the radar screen. So we're going to buy above 172.50, and my stop is going to be 172. These are all the numbers you do trade planning session. These are the numbers you're going to get by email. 172, this is going to be my stop. On the short side, if I'm looking at this, Khalid and Simon, can you put for me the structure points, the long term from this, because I don't have them on this. So if you're looking at, for me to go short, there is no technical reason why we should go short unless it takes out the low of this day. That this trend is so strong to the upside, going short has to be, if it's not long liquidation, then so the next structure long point, as Khalid said, is 179. I don't see 179. I don't see that here. You sure 179? 92. Yeah, you're right. You are absolutely right, my man. 179. Yeah, that's exactly. You're right. You're right. When you're right, you're right. Okay, so 172. So the next structure long point is 179. 179. And the other thing is that the software is going to put these lines for you on the chart too, guys. 179. What? 179. 92. Okay, on the short side, what's the structure short ahead? On the short side, we're going to go short again, unless it takes below the 171.30, 171.03. There is no reason for us to go short. It has to take out this low, otherwise it's going to be wasting our time. So this is 171.03. So we're going to go short below 171.03. And the structure short point is 169.19. And if we go short below the 171.03, we're going to place our stop right over here. We're just going to give it again the reasonable volatility, but I'm not going to give it more than 171.40. So I'm going to go, here is what is going to happen. We're going to go short below the 71.03 here, and we are going to place our stop pretty much over here. So this is the stop of the short. The stop is going to be here, and the short is below this, and the structure short is below at 179. So this is the numbers for the pound yen. We're buying above 72.50. The structure long point is 179, so you had 700 pips as a target, and your stop is 172, so you're risking 50 pips to make 700, so your risk reward is about 15 to 1 or 10 to 1. On the short side, we're going to go short. It's a counter trend, so we're keeping a tight stop at 171.03. The significant short point is 169.19, and the stop is 171.40. Okay, that is the pound yen. Let me save that, and then we're going to do